What's up? It's Luke, and I want to look into if MicroStrategy is a Ponzi scheme. This has been gaining popularity recently, and I want to discuss it. So, a Ponzi scheme is a scheme that involves paying existing investors in a non-existent enterprise with funds collected from new investors. So why is MicroStrategy not this? This belief is gaining popularity from their most recent earnings call. They're trying to raise this much capital each year for buying Bitcoin. And people are saying, oh, well, if you kind of stack these up and turn it to its side, it kind of looks like a pyramid or a Ponzi scheme, where it's like you would need this much, and then you would have to keep raising more and more each year in order to fund the people that got in initially, which is this. But this is dumb to just because it's in the shape of a pyramid does not mean it's a pyramid scheme, because there is a legitimate business and there is legitimate demand for the product that they are offering. And I think the people who are claiming that it's a Ponzi scheme either have a lack of understanding of Bitcoin or a lack of understanding of what the company actually is doing. So what they've been doing is buying Bitcoin by taking on debt many different ways. And they've stacked over 331,000, about over 2% of all of the Bitcoin that will ever exist. So why is this important, and why is there a demand for a company that is only buying Bitcoin? So what they do with this Bitcoin is they try to offer a positive return on top of the performance of the underlying asset. And that is why, as you can see, MicroStrategy, the equity, the stock, is going to outperform the spot Bitcoin ETFs, or just Bitcoin, by 1.5x. And they do this by issuing bonds. And these bonds they've been performing so strong to the point where they can issue bonds at 0% interest, and they will still get funding for them because the bond itself performs so well. If you know anything about bonds, they are usually not high-performing assets, but by creating a Bitcoin-backed bond, they have been able to basically give you a steroided bond that outperforms any other option. So there's plenty of demand for these bonds, and they were raising like 500 million per day through selling these bonds, which is money that they can then use to buy more Bitcoin. So that's the first thing, is they are a legitimate enterprise. And the second thing is funds collected from new investors has nothing to do with how an existing investor is being paid out, because they actually own all of this Bitcoin, and none of this Bitcoin is used as collateral for any of the loans that they have right now. All of this Bitcoin they will own forever, and they are not planning on selling it. So if the price of Bitcoin were to go down, they wouldn't get margin called and would have to sell any of this. So new investors coming in, it's not like they have to pull some shady maneuver with continuing this onto the future. They don't have to do that. They are just guessing that their demand for their products will go up by this much each year as they continue to grow. But people getting in 2027 will continue to see the rewards going forward. So yeah, and the final thing is their strategy and their plan is open source. Any company can come in and look at their playbook and copy what Saylor has been doing. And really what it's shown is that the reason MicroStrategy has performed so well over the past few years is because Bitcoin is a superior savings instrument than the dollar. And a company that is basically taking advantage of this fact is obviously going to do well. And just the fact that they are the first to do it, they have the brains and they have the right people involved to never sell and stack as many as they possibly can. And they also have figured out that there is plenty of demand for a high-performance Bitcoin-backed bond for institutional investment. So yeah, if you found this interesting, please subscribe.